there's an expression in China, which I'm not going to try to give you in Chinese, but it's crossing the river by touching the stones. To cross the river by touching the stones essentially means we're not going to try to do this in one giant leap or in 2 or 3 steps. There's going to be many small steps feeling our way across this divide between a relatively controlled state-directed economy to a relatively more open market economy. And you see that almost every day with a change in regulation in one part of the financial system or the other. The Chinese government is right now attempting to make a pivot from old line manufacturing, mining, and so on towards the consumer sector. And part of that is because the opportunities for further growth are more in that area, and part of it is to deal with the interests of the Chinese people. The government, not surprisingly, is very interested in social stability and pleasing people. Yeah, it's not a democracy in the sense that we would know about it here in North America, and there is a significant influence on the government of what's popular, and the Chinese people are interested in consuming, not surprisingly. First of all, be careful about the property markets. They're fully priced in many localities and overpriced in others, particularly the Tier 1 cities, Shanghai, Beijing, Guangzhou, and Shenzhen. The property prices in those cities are very high. So if someone were to say, here's a new condo development in Shenzhen, it'll open next year, and we already have 30% of the units subscribed, why don't you invest as a limited partner, sign here? I would be concerned about putting my money at risk at that unless I really understood the economics of the project at the pricing that we're seeing in those markets today. But the speakers in my class that have been doing venture capital, private equity in China have found other kinds of investments that make a lot of sense for them, including high tech. My class and I have been extremely excited about the prospects in China for what we are calling, let's say, mobile payments, fintech, or financial technology, the ability to transfer funds on your phone, to borrow on your phone, to lend on your phone, to buy goods and services on your phone, and that back-to-back with the internet. Large firms that I'm sure you've heard of, like Tencent and Alibaba, have been enormously profitable based on e-commerce, and now they are taking advantage of their enormous reach into the Chinese consumer sector to do financial services. Again, lending, credit scoring, payment systems, and it's growing by leaps and bounds, and is I would say, has more penetration in China than in the United States. China's stock market is very volatile, in part because there's a lot of retail investors that haven't spent, the kind of time analyzing balance sheets and financial income statements the way that U.S. Individual investors do, and they can get carried away pretty easily. And if they were to allow a lot of small companies to go public, that could create an undue amount of casino-like behavior in China's equity market. So they want to go slowly and carefully. Again, remember the metaphor of crossing the river by touching the stones. They want to carefully consider what might be the alternatives for how to allow Chinese corporations to get capital without encouraging, at the same time, an excessively volatile stock market.